So, we've got the big step done. The house is selected and you're under contract. Hasn't this been fun? The next critical step is really getting the mortgage process moving along. So, let's spend a few minutes with our friends at Movement Mortgage and learn about all of your options. Rick, how you doing, sir?
I'm good, brother. It's good to see you, Frank.
Good to see you.
Pleasure, brother.
Yeah, did you have a nice Labor Day weekend?
It was awesome. Lots of food, lots of apples at the Apple Festival. Ate way too many donuts. Those things will put you in a coma quickly.
Yeah, we know that drill, so it's nice to have a little time off, no doubt about it.
It was much needed. Usually holiday weekends are pretty busy because most people can't deal with, mortgages and housing and everything while they're working. So usually nights and weekends are pretty busy. So it was nice to have a day that wasn't too crazy and spend some time with family.
So just a couple of questions, and let's see if we can, keep our audience here informed and on top of what's happening in the mortgage industry. So, buyers always focus on the house. Yep. And then all of a sudden you got to realize, hold it, wait just a second. Now we're getting all the financing, all the packages together, and
I think sometimes it's unfortunately an afterthought. People are so focused on finding the house, and they don't think about really the approval or talking to the lender should be the first step.
Yes, correct.
There's nothing more soul destroying than going and finding a house that you can picture you and your family making a home, and then figuring out that you can't afford it, or there's a skeleton in the closet that avoids you from being able to do so. There's a lot of cross T's and dotted lowercase J's in the mortgage world. And, that's where having a trusted advisor comes in, because it's not just a transaction for us. It's a loan officer for life. Yeah. So we're here to help throughout buying their first house to buying their last house. Yeah. I think we're here as a team for our clients to guide them through the whole process, because never going to blow smoke and say it's the easiest thing in the world. It's not. It's your largest asset and your largest liability. Right. But we're here to make it more of a Disney-like experience rather than, sometimes you go through like the Bankzillas. Yeah. You've got these big conglomerates and, it's almost like they have hurdles in place that are hard to jump over. Ours is to be your track team, so to speak, and help you get over those hurdles.
Right now here in North Carolina, what are some loan programs that are really popular, and what types, really, serve the buyers the best?
Recently, and it's become more prevalent as time's gone by, is housing affordability. Every housing discussion or mortgage discussion or real estate discussion that comes in is affordable housing. Right. We do live in one of the higher cost areas in Western North Carolina for the entire state. So a lot of the first-time home buyer programs. So we've got, whether it be FHA, USDA, it's kind of like living in the country but in a city. Fortunately, in this area, almost all of Western North Carolina is lit up on the USDA eligibility map. So there's really only a few places, downtown Asheville, and there's a little spot over by the airport. Other than that, 100% financing USDA. So, and then also on the other flip side of it, we are a large retiree community here in Hendersonville. So there are your conventional mortgages that can take into account some investments. For collateral, say if they only are on Social Security but they have a bunch of money in the bank, we can look at asset depletion to be able to get them into a conventional mortgage. And then ultimately, if the income's just not there, they can use their house as an investment vessel with some type of a reverse mortgage.
Let's talk a little bit about how, interest rates and closing costs, compare between, you guys, a local lender and versus the big national bank. What's the skinny on this?
It's really just a cost issue. You look at your large banks, your Bankzillas, they have such a huge overhead on a monthly basis. They have all the brick and mortars in all the cities, big and little, throughout the country. We, as a small local lender, we are a national company. We rank in the top 10 in the nation, but we have little offices like this, so we don't have the overhead on there. So as far as interest rates and closing costs, we tend to be a good bit lower than your large national conglomerates. Also, the other flip side to that is everybody heard the term banker hours. You can't get a hold of your mortgage loan officer typically at a bank because they do work banker hours. You're 8 to 5, you're 9 to 5. Whereas I had mentioned earlier, and we talked about, real estate doesn't wait for anybody. So most people can't do anything with applying for a mortgage, with uploading documents, with signing contracts, with the negotiations till they're done with their day. So your local lenders and your smaller lenders are going to be available. One of the worst things you can do is have a high stress situation with low communication. So that's where we come in. You can reach me 24/7, 365. Doesn't matter what it is, I'm available.
So really, I mean, rates are rates to a certain extent, but the reality, what makes a difference is having more of a local lender.
Yeah, you look at it. There's an app anybody can download. It's called Mortgage News Daily, and it takes all 50 top lenders in the nation polled on a daily basis. Usually has about a 24-hour lag time. So as of today, we're roughly about 6.5. So that's the top 50 lenders in the country. Yeah. All showing that same rate. Are you going to see a difference between one to the next? Yeah, you might see a 16th or an 8th difference. I think a lot of people will look at, you've got a lot of your online players that have come into it. I would consider them to be a big bank as well because of the size that these companies have gotten to. With those, yes, they might have a cheaper interest rate, say by an 1/8 or a quarter, but you're dealing with a customer service rep. You're not dealing with necessarily a loan officer. Right. So it also, you do pay a little bit for the expertise. It's like I got into the industry in 2000. A lot of people got into this industry in 2020 and 2021 when interest rates dropped to historic lows because it was easy money. Yeah. And we went from 3 years ago, there was 420,000 loan officers in the country. Now we have 65,000 loan officers. So it's, the people that got in for the money have gotten back out. The ones that have stuck around are now the ones that are your trusted professionals. Yeah. Tell
us a little bit about the common mistakes that people they deal with when they're starting to apply for a mortgage.
Yeah. So I can say first piece of advice is always listen to your trusted team. Borrowers and people in general, we look at, shiny. So it's like they're getting into this house, they're wanting the new furniture, they're wanting the new appliances, they're wanting the upgrades. So whenever we do an application and issue an approval, that's based off of a snapshot of what their financial profile is at that moment. So ways to derail that is go buy you that new car that goes with that new house. Go buy all of your appliances and finance them prior to closing. So there's nothing worse than, getting a week before closing and we get an updated credit notification that a borrower has a inquiry on their credit from an Aston Martin dealership or a Ford dealership or a Chevy dealership. Mr. and Mrs. Customer, what are you doing? Oh, I'm buying a new car. We're getting a new house. Yeah. Let's pump the brakes. So some of the biggest mistakes that people can make, one, not getting pre-approved. It's like going to the potluck empty-handed. You want to make sure that all the skeletons are out of the closet, all of your information's on the table. We know all of the parameters that can assist or hinder in you getting approved. So go ahead and not getting approved and just making an offer on a house. We live in an area where it is a cash-heavy area due to some of our industries that we have here. Tourism is Western North Carolina's biggest provider of income. So cash. Yes, cash is king, but we need to see that season. So if you're making large dollar deposits into your bank account, we're going to have to source those. So if there's mattress money out there, we need to make sure that it's in a bank account for 60 days prior to the application. So depositing money. And then opening new credit cards. There's a sale on something every single day. Every time you go to insert retailer, it's would you like to apply for a credit card? So a big no-no is when we take our snapshot and we get the information, we need to make sure that information stays true all the way through to closing.
Right. When you're ready, you lock in on the house. Yes. Don't go make any crazy purchases.
Yes.
Right?
Yes.
It's amazing what that can do, especially for first-time home buyers.
Correct. And especially in this market, like I said, with it being an expensive market, first-time home buyers, a lot of times we're right on the thresholds of affordability for the borrower. And so, just one or two little things can derail that pretty quickly.
Well, speaking of first-time home buyers, what types of programs are there available in the state?
Yes, so North Carolina has a great program. So North Carolina Housing Finance Authority, they have a wonderful first-time home buyer program. It is underwritten through them. We underwrite ours, we send it over to them for their underwriting, it comes back. So they do up to $15,000 in down payment assistance in targeted areas. So that's pretty well everywhere. So big help there because you figure there's a lot of folks out there that'll save and they might have the down payment for the house, whether it be 3.5% on FHA, 3% for first-time home buyers on conventional, closing costs on USDA, but maybe they don't have enough for all of the closing costs. And if it's a hot deal and a hot house, the seller might not be willing to give up those concessions for seller paid closing costs. So that $15,000 can go towards a portion of down payment as well as paying some of those closing costs. So really hot ticket item there.
It's so important for that first time home buyer. Know your options ahead of time.
Yes. And USDA being that we are lit up like a Christmas tree here is another great option, being that it is 100% financing. So they make you jump through a couple more hoops for those, being that they are lending 100% of the house's value, but a great tool for first-time home buyers.
How do things like HOA and insurance and all those things, how does that impact from a qualification standpoint?
Yeah, so budget busters. So you have somebody that's approved for, say, a $275,000 house. They find this gorgeous condo somewhere in the area, and lo and behold, we were approved for $275,000, but we weren't counting on that homeowners association dues of $250, $350. So it can put somebody over budget, therefore reducing their purchase ability depending on what those taxes and insurances are. So homeowners association dues can derail a deal. So when you're talking to your loan officer and having a conversation with the real estate agent, knowing up front of your wants and your needs, are you willing to look at townhomes? Are you willing to look at condos? Yes. Okay, we need to go ahead and get a few ideas of what these association dues are, so the loan officer can budget for that. Taxes and insurance, there are some places in the surrounding counties where you're paying double taxes. You're paying city and county, so that does make a big difference. If we're budgeting for $3,000 a year for homeowners or for taxes, and it comes back at double that, that can derail a deal too. So knowing what you're looking for and having the conversation with your agent as far as what your wants and needs are for your prospective house is huge, so that we can go ahead and budget for what those are. Are you looking in high dollar areas? Are you looking in some of our resort areas, near Chimney Rock or Boone, or where you're going to have large HOA dues? And so we need to know that.
When you're asking a client tough questions, it's not that you're trying to be tough. You're just trying to uncover.
It's being thorough.
Thorough.
So it would be, we would be doing our clients a disservice if we weren't asking these, tough questions, if you will. And it's just to make sure that, Disney-like experience. We don't like hiccups. We don't like turbulence when we fly. We don't like it when we do loans.
So if someone wanted to be in the best position to buy in the next 6 to 12 months, what steps should they be taking, right now?
Yeah, so it's knowing your information, right? So, we look at income, credit, assets, job history. There's a lot of different factors that we look at when going through the mortgage process. So it's knowing that information. So with credit, there's a million different options out there to be able to check your credit. You can either go to, the actual repositories themselves, TransUnion, Equifax, and Experian, or there's also every credit card offers some type of credit monitoring service. myfico.com, even something like Credit Karma, which isn't your actual scores, but it's a good litmus test to kind of see where things are going. So you really want to know where that is. If you've got debt out there, know what it is. So if you have a credit card balance, of $9,000 on a $10,000 credit limit, that's affecting your credit. So it's, if you're going to set yourself up for success, having that initial conversation with a loan officer, we can guide you in that. But if not, know what your balances are. You want your balances to be less than 30% of their limit, and just kind of make sure that any of your high debt credit cards where you're not really touching the balances, try to attack those. Try to get rid of some of that debt first, and saving as much as you can. Knowing your budget, knowing where your income is, knowing what your monthly debts are, and trying to save for that down payment and or closing costs. To be able to put yourself in a better situation, with making more of a down payment. Obviously, that's going to be a lower monthly payment. And so having those monies saved, making sure that you're pre-approved. Obviously, everything starts with that, just knowing what you can do. Any loan officer will guide you through the process of, hey, I'm not ready to buy yet, but I want to know what I need to do to get there, and we'll help you through that. You can't make a mistake with talking to somebody too early. Talking with your loan officer, and they'll get you ready for, if it be, the next week, the next month, the next year, the next 5 years, we can put a plan in place to help you succeed.
So 6 months of discipline can make a big difference.
It can make a huge difference. Yes.
Well, Rick, thank you very much. This is really helpful, and it's amazing how there is just listening to you talk, you realize all the options which are available, and those people just don't think they're aware of that. So
there are, and that's what we're here for, is to help.
Thanks so much. We appreciate it.
Thanks, brother.
All righty. Take care.
All righty.
I'm Frank Wood, real estate consultant at your service.